Hi, I'm Tom Summers with Edina Realty. Today I want to cover buying a foreclosed home in Minnesota. Buying a foreclosure is not all that different from buying a traditional sale, but there are a few things that make it a little bit different that you're going to want to know about to make you a more informed buyer. First off, for those of you that don't know, a foreclosure is owned by a bank. It can also be referred to as a lender-owned home, corporate-owned, company-owned, REO property. There's several different names, but the bottom line is they're all foreclosures and they're all owned by a lending institution. Lenders are in the business of lending money, not owning houses, so they don't want to hold these properties. The first thing you're going to want to do is find a real estate agent that knows what they're doing. They have to understand the difference between a short sale and a foreclosure, as well as have a lot of information and knowledge about the foreclosure process. You have to understand it as an agent from the listing sales side as much as you do from the buyer's side, so that you can help the buyer work their way through the whole process and end up successful at the end with a home. Once you've chosen an agent, sit down with a loan officer and talk about all of your options. You want to know how much you can, get for a loan. You want to know where your payments are so you can figure out where your comfort level is and what type of loan are you qualified for. Do you do FHA? Can you do conventional or cash? All of them have different repercussions. The banks love cash offers, but they don't come along all that often. The next in line would be a conventional offer, and third would be an FHA. I'm not saying that an FHA loan can't get a foreclosure, but it's always going to lose up against the other two if everything is considered equal. So the more options you have, the better off you are. The loan officer will explain all of these choices to you. When you start looking at foreclosures, one of the first things you want to do is determine the value of the house. Just because it's a foreclosure doesn't necessarily mean that it's a good deal. There are a lot of overpriced foreclosures out there, just like there's a lot of overpriced traditional sales as well. Once you determine what the value is of the property and its condition right now, the next thing you want to do is figure out, okay, what would this house be worth after I do this list of things that I want to do to fix it up? If you find that the amount of money you're going to have to stick into the house to improve it to where you want it to be is going to be way more value-wise than what the other homes in the market are selling for once they've been fixed up, then you might have a problem. You have to really love that home and realize that you're probably in for the long haul and would have to probably live there 5 to 10 years before you could resell it and get your money back out or break even. So that's a great way to kind of consider, is this truly a good deal for me, or is it not? For some people it will be and some people it won't. It really depends on what your needs are. Once you've determined the value, the next thing you're going to do is negotiate the purchase agreement. Now with a bank, it's the bottom line. That's all they care about. But I'm not saying that it's only a dollar value. They also look at other things in the contract, like, are you asking for seller paid closing costs? Are you doing an inspection? How long is that inspection going to be? And what type of financing are you going to use? Remember, they loan money, they don't own houses. They want to make sure that if they enter into a purchase agreement with you, that they end up at the closing table on the scheduled day. You show up, sign the paperwork, they get their money, and they're done. That's the most important thing to the bank. They don't want things dragging out. Plus, you're going to want to have a home inspection after you have all of the paperwork done, because the bank is going to throw a bunch of extra addendums at you that you wouldn't normally see in a traditional sale that essentially cover them from hold harmless agreements to they will do different types of disclosures for mold and that they don't know anything, they don't live in the property. So in Minnesota, typically what the banks will do is they'll fill out what we call an alternative seller's disclosure statement, which is a 4-page statement that they typically will write in big bold black letters on each page, no knowledge or no knowledge of, meaning that we don't know anything about the property. Whereas with a traditional seller, they will fill out the traditional 9-page seller's disclosure where they'll go into all the detail of everything they've known or have experienced with the home since they've owned it. So there's a big difference. You're going to want to have an inspection on both sides, but it's even more important that you get a really good home inspection when you're looking at a foreclosure, because once you sign the papers and you own it, you can't go back at them and sue them and they won't agree to arbitration. So let's say you've had the inspection and you're ready to go and move forward. The last big piece before you get to closing is title work and your closing company. This will be picked out about midway through the whole process, and it's a very important piece to this process. You want to make sure that the title company that you choose and the closer that you choose also have a lot of experience in foreclosures and can get you from point A to point B. You want to use someone who's local, who is working in your best interest. Because if you have a closer from out of state for the bank, they may think that the rules and laws here in Minnesota are different because they are in, say, California or New York. You want a local closer that's going to make sure that the title work is done properly so that everything can be submitted to the county and done in a timely fashion, so that at the end of the day, when you go to sell the property 1, 2, 3 years from now or 10 years from now, you don't end up spending thousands and thousands of dollars correcting a title issue that could have been taken care of at the bank's expense before you close. These are some of the most important things. There's a lot more to buying a foreclosure than this that kind of fall under the category of, traditional sales as well. But these are the ones that I would consider to be the most important. If you have any questions, please feel free to give me a call or send me an email. I'm more than happy to talk to you and answer any questions that you might have. Thanks so much for tuning in. Until next time, have a great week.